Good day. My name is Rachel McManus, and I will be discussing the new and improved accounting standard, revenue recognition from contracts with customers. I will be discussing a few main points today. These points include the convergence effort between the IASB, known as the International Accounting Standards Board, and the FASB, known as the Financial Accounting Standards Boards. The topics will also include the changes made to these standards, the ways of implementing the new standard, the costs and benefits associated with having a new standard, and lastly, my recommendation to help keep costs down during implementation. FASB currently has United States Generally Accepted Accounting Principles, and the IASB has the International Financial Reporting Standards. Together, they have issued the Accounting Standards Update 2014-09. The new standard is now known as ASC 606 under FASB and IFRS 15 under the IASB. The change takes FASB's rule-based approach, which is very detailed, intuitive, and structured for investor protection, and it merges it with the IASB's principle-based approach, which allows for more creative interpretation and professional judgment. Together, both organizations have designed a 5-step plan for recognizing revenue. The first step of this plan is to identify a contract with a customer. The second step is to identify the performance obligations. There can be more than one performance obligation in the contract. 3 is to determine the transaction price. 4 is to allocate the transaction price to the obligations or multiple obligations. And then 5 is to recognize revenue as the obligations are met. There was also a change in the disclosure of the financial statements. The disclosures are to include the contracts with customers, any significant judgments, and the assets recognized from the costs of a contract. Due to companies not being able to meet the implementation deadlines, both organizations have decided to issue ASU 2015-14 to push the effective date back 1 year for both public and private companies. The effective date for public companies is now December 15th, 2017, and for private companies, same date in 2018. However, they do still allow for early implementation. There are 2 ways in which a company can implement the new standards. The first is they may present prior periods in accordance with the revised model. This is known as the full retrospective approach. They may also record a cumulative effect adjustment to opening retained earnings / equity accompanied by the disclosures. This is known as the modified retrospective approach. Recently, the American Institute of Certified Public Accountants has issued a 7-step plan for implementation. Companies can use this plan to ensure they are following the rules, and if they need, it can give them a starting point for a creative plan of action. The FASB does take careful consideration in making the appropriate choices to fairly represent everyone that is being affected by the standard changes. Even though they do try and fairly represent everybody, there are still costs associated for users and preparers. The costs will include, but are not limited to, re-educating, changing analysis processes, hiring additional employees, new IT software or programs, and then also any additional audit fees that come from having more estimates in the disclosures. Even with these costs, though, there are still many benefits to having a new standard. Some of these benefits for this new standard include better comparability between financial statements, more accurate depiction of financial performance and position. There's also a better ability to make more informed decisions and the ability to minimize inconsistencies. My recommendation for companies to keep costs down include creating a budget to ensure there is no overspending during this implementation process. Also, consider re-educating employees to help prevent any future misstatement errors. And then personally, speaking from experience, I would consider asking employees if they are willing to take on more responsibilities and during a certain time frame to help free up other employees that are willing to help with software testing, meeting with consultants, and going over all these new contracts. But overall, I think this change will be beneficial for both users and preparers of financial statements. Thank you.